Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up with the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Monday, August 23rd. I'm your host, Jesse Allen. Thanks for joining us here as always. We are back in studio today after a week of traveling. It was great to get out and enjoy Dakota Fest in Mitchell, South Dakota last week, but also happy to be back at our studio here today. And we got a busy show lined up for you here with a lot to talk about in the grain markets after a couple real down days to end last week. We come back in here today and we were fairly mixed in the trade. We'll call it that. Let's talk about all of it. Let's bring in our good friend John Heinberg with Total Farm Marketing joining us here this afternoon. And John, good afternoon to you. And, you know, I came back here on Monday and I'm thinking, all right, Thursday, Friday, pretty rough days in the market. Maybe we'll get a little bit back today. And we kind of did, but we also kind of just drifted lower from the open today. What are your overall thoughts with just the tone in this grain market after today's close?
Well, just in that time of year again, where it's just going to be hard to get things to move higher. It just still feels that way. Obviously, we're chewing on the pro farmer numbers from Friday, so that had some spillover into today since the market really hasn't had a chance to trade those. I think they were kind of anticipated, especially with just some of the numbers that were coming out and how hard we sold off last week. You know, we priced probably some of those bigger numbers in. At least in that regard. Second thing, too, still keeping an eye on weather, what's going to happen there and how things are coming together. And, especially for the bean side of the equation, had some rain on the radar over the weekend, helped out some, missed some as usual. But again, maybe not enough to maybe get this bean market over the finish line. But then we're still talking a little bit more out there. We finally saw some corn demand today. So that was encouraging to see Mexico step in for 18 million bushels of corn today. So we piece it all together, and we still got a market that seasonally wants to work sideways to lower. We held on to some really good support today for both corn and beans. We got trend line underneath this right here where we're holding. So now it's going to be kind of a key area. So the bulls need some more news. We need another corn sale tomorrow. We need to see China step into that soybean market again and pick them up here sub $13. I think that'd be something to get us moving. But typical Monday price action, not a lot of direction where we're headed. And we'll see the crop ratings today, see if there's any surprises there like we've seen over the last couple of weeks. And then obviously this week we got options expiration on Friday for all the September options. So that's going to bring a little more volatility as we try to figure out which way we want to go going into that day. So there, I covered a lot of little things. Again, all bits and pieces that kind of just kept this market real choppy and sideways today.
Well, John, looking after Thursday and Friday, and I've asked this question to a few folks, I'd love your take on it. Do you feel like we did a lot of technical damage to the market or not? Just after that big risk-off day Thursday, the follow-through on Friday, we broke through some support areas. You mentioned we held some support today, but do you think we just did a lot of technical damage to this market at the end of last week?
We did. For lack of a better way to describe it, you see the breakdown in prices. Again, we tumbled hard, going into the end of the week. We took out the 100-day moving average underneath beans. Same thing in corn. We kind of took out that 100-day moving average. That's kind of one of those technical barriers where markets like to go above or below. So it's going to be real hard to kind of keep pushing back up through that level. That'll be our new resistance, is that 100-day moving average, which, still 15 cents above the market here for corn and even more so for beans. So the technical damage is there. The weekly chart did not close very well, so it opens the door for some potential downside. But then we got to still keep in mind where we are in the supply picture, where we are in the demand picture. Corn has now gotten cheap here at $5.35. Beans are already cheap at $13 or $12.90 where we closed today. Does that open the door for this market to at least find some footing here? Now on the horizon is harvest. This crop for corn especially is starting to come together pretty quickly in some of these areas. They're going to be rolling a couple weeks earlier than they planned. And when we start bringing those fresh bushels in, that could be our next round of real selling pressure. Is going to be that hedging pressure when we get those combines rolling.
So with harvest sneaking up on us, and I've heard some stories from some producers here the last couple of weeks about, how they kind of sat around, maybe got a little complacent, didn't get some protection under this market, and now we saw some prices slip here. So heading into harvest and heading into maybe some more, windows for maybe some pressure. Would it be smart for a producer to be looking to lock a floor in here with these levels where they're at? Might not be where it was a few weeks ago, but still pretty good price action, John.
Yeah, there's still some good value. You're talking 540 basically, 535 on December corn. That's still good prices. I'm a little concerned about what happens with the cash market. This is also that window in cash where, hey, the retailers or the end user says, we finally got enough. We're going to wait for the new supplies. And you see that basis come crashing down. That's also a concerning point to me here now. So again, cheap puts underneath this thing. Again, if you just want to protect $5, they're 15 cents for a $5 put for December. So at least get you till the 26th of November, and you open up that top side in case we do get these combines rolling and we don't have the yield out there that everybody thinks is out there, or the acres aren't there. That gets you through end of September reports of grain stocks and the final acreage numbers, as well as that October and WASDE in terms of its number projections. So with that, that's a real cheap insurance policy to at least keep $5 floor in front of you.
It just makes sense to me. I think it makes sense to a lot of folks as well, just to have that protection under the market, because, we talk about these different crop tours. You mentioned Pro Farmer last week, and I know their numbers pretty much fell in line with some of the other numbers we've seen. I know DTN's numbers were pretty close. They're not far off from USDA's numbers. You get the windshield view of this crop. I've had plenty of it here the last couple of weeks. And there's some areas that look good, but some of these tours have also missed areas where there's pictures and what other people have seen that it's not so good. I talk Western Minnesota, North Dakota, some of these areas that, they're going to maybe catch some rains or have caught rains, but it's not going to necessarily help. And then you wonder about Iowa too, starting to get a little dry again, needing to catch some more rain. You wonder if these yields are actually going to come to fruition once those combines roll, John.
The weather models are starting to, again, the forecasts are showing that probably is going to be tougher on the crop. You're talking some good heat coming in again this week. And, what rain does come through, and, it's going to help some. Again, it's going to stay probably in the northern tier more the next couple of days. There's a lot of variability out there. And again, I'm talking to clients in Iowa who are very concerned. They haven't picked up the rain. Actually, one client stated to me today, he picked up about a half inch here over the weekend. That was his first rainfall for the entire month of August. He's like, I just don't know if I can put a crop together, especially beans, with only one small rainfall in the month of August, especially with the heat and considering where the soil moisture is. So those are stories that are out there. When Pro Farmer goes through and does their sampling, again, it's just a general pattern. They hit or miss on those locations. So is it a true picture? We'll see. Their method is what it is, and it's highly anticipated by the market. Maybe some of the reason we were sliding lower was they were anticipating that bigger number anyway. And then we did throw that EPA news in on Friday, which really kind of put the hammer down on Friday's prices. But, that's still something we just got to watch. And it's going to take the combines rolling, and realistically, like in the past, may not have a good picture on this crop till January and even later. And we've kind of dealt with that over the past couple of years where the crop was overestimated, and all of a sudden the cash market decided what the price was going to be.
Another thing too is South America. We're going to start getting some planting in September and moving forward there, and we'll see if there's any issues getting in the fields in South America, as we know they had issues with that safrinha crop here earlier this year as well. So something to watch there too. John, I think we covered pretty much everything in the grains today. It seems pretty cut and dry right now today. Let's flip to livestock. Cattle market. That was looking really strong today, especially live cattle and deferred feeders. Talk about the price action we saw there, and I know we had the cattle on feed report Friday, which was fairly friendly to us as well.
Yeah, cattle on feed numbers obviously came in right in with expectations, maybe a touch friendly in some areas. just confirmed what this market was already knowing, which was that we got a tighter supply of cattle going forward. So 98% of last year, 98.2% of last year. So, just over 11 million head of cattle on feed as of the 1st of August. And obviously then we go look at that strong retail price, which didn't back off again today, 348 at midday on choice carcasses, new high for the year last week, and adding to that on a daily basis. That just keeps some money flowing to this market. Curious when we see price action like today. We get that breakout. We got the gap above the last day, Friday's close. It's a good, strong technical move. Now we got to see if we can get some follow through there. The cap that's still going to be on this market is going to be the cash trade. We're estimating packer margins to be close to $1,000 a head, and this market really thinks they can pump a little bit more out there for cash. They continue to use the tune that, hey, we're only killing 120,000 head a day. We don't have the room to kill that much more than that because of slaughter capacity. So that could still be the wet blanket that minimizes the rally, but a good breakout today in live cattle. Feeder followed suit, pushing up to the 170 level, those deferred contracts on just that tighter supply picture. We're looking at contract highs again out in those regions, and just the feeder market kind of maybe making its parabolic move. I know tomorrow morning I'm going to be talking with feeder guys. We're going to be getting some puts in here. You're looking at historical highs. You can lock in a floor that's going to look really good for a long time, and let this market keep running if it wants, and then work on the cash side later, or keep moving the puts up. But right now, when you start talking about getting puts in the 160s, 170s, and having some targets out there, that's just going to be good common sense to get underneath this market, because it can move very, very quickly when things flip over if there is a reason to. And who knows? In cattle, it might not take much. And with what's going on geopolitically, it makes me a little nervous, especially when we get this overvalued.
Yeah, and there's a lot of other factors in the cattle market as well, the packer margin issues, and just a lot of things that are being discussed right now. So, it seems to me that where this cattle market's at, it would make sense to get some puts in place in that nature. And, we talk about beef demand in general. I mean, typically after Labor Day, it seems like beef demand kind of wanes, but that's not the indication right now. It seems like beef demand could be there through the end of the year, and especially with COVID, if folks are forced back into their homes a little bit more, might be more cooking at home and more buying a beef at the grocery store there, John.
That's still going to be the wild card going forward here. You're talking, where beef carcasses are trading compared to pork right now. We're getting to that window. I'm getting a little cautious too, from the standpoint of, do we start pricing beef out of the value play here? And we look at the pork side of the equation. We've seen a pretty big explosion in cattle prices, where pork prices have quickly tumbled the other direction. We're looking at a $50 spread today, but basically between December hogs and December cattle. We talked about the other side when it was flipped around. It was the hogs that were way over cattle. Maybe we're getting a little extended to that way as well. So kind of keep an eye on that. When you're talking $350 on a choice carcass, you're looking at 120 on a hog. That's still a pretty big difference in price, and that could start becoming one of those leading factors that could put some pressure on this market. I'm worried about these breakouts. We get a couple hard days up. Next thing you know, they say we're good, and they just pull the plug because they need to, and then the technical sellers kick back in. So that's something to keep an eye on. Again, I encourage looking at those put floors, or if you want to, feel free to lock those cattle in, and if we do get a pullback, find some way to get a call or two over top this market down the road.
Well, when you talked about that big spread between cattle and hogs, and the hog market today ended up succumbing to some pressure. It was kind of being drug along by cattle there for a while. And then, we look at the cash index and hogs still and everything else. And just it seems like there's some things that are discouraging in this hog market right now. But then again, there's also some things that maybe we can look at that are encouraging. In what way are you leaning? Are you a little more discouraged or encouraged by this hog market right now?
I'm kind of mixed, actually. We got a couple different things that are pointing one way than the other, and the market's actually kind of responding. I mean, we drew a line right basically here at 88 now for the last 6 days in that October contract, and we're holding right around it. So it's combination. You got retail values soft again at midday today, so we're not getting the bid on the demand side of the equation. You got that spread between the October contract and the index now still sitting around $20. That's still historically wide, so that gives some support underneath that October contract. The index is starting to work a little bit lower here. We'll see which one meets which. But right now, just because of that lack of demand and where we kind of are here, we're just choppy the last 3 days. We've had dollar plus moves, but we've gone nowhere in that hog market. So it just feels like we want to hold out a little bit. Cash market really isn't anything to write home about at this stage. It's just kind of sitting here as well. And I think it's just kind of waiting for maybe the cattle market to calm down and see some money flow back into those hogs. But, it's all going to be about demand. We need to see those retail values start stepping back up again. We'll see if, it's maybe in its a little bit of a Labor Day hole right now. We'll have to watch that. But if we start seeing some good bid there again, the hog market can wake right back up, especially still holding that discount to that cash market.
Yeah, John, a lot of things to consider for sure in this hog market. Dairy market, any thoughts there briefly, what we're seeing with that as we start the week?
Nice move higher today. Again, similar to what we're talking about some of these other markets, just in consolidation, low 17s or mid lower 17s now in that September contract. Saw a nice little move in cheese trade, nickel higher today. It just tells me maybe we got a market that's finally getting fairly priced in here, and we'll probably just continue to consolidate. Again, keep an eye on what cheese trade does, but right now we're $17.74 on blocks. $17.40 on the cheese price or on the milk price for September. We're probably getting into a fairly comfortable market in that regard. We went down, we put those lows in. Now we're consolidating here. We'll see what direction we want to go from here as we look for news. Again, we had dairy production report last week. Still keeping a lot of milk and a lot of animals out there. And really, until those animals leave the system, I'm still cautious of that longer term price, especially given any possible concerns we have on demand.
John, any other final thoughts? Anything else you want to reiterate for us here today?
We didn't touch on wheat today, and wheat had a nice day. It was probably what kind of kept corn in the ball game a little bit. A couple different things to watch there. First off, dollar index broke out to new highs here recently. Hard reversal last couple of days, so maybe we kind of hit a sell point. We'll have to see how that kind of comes together. A lot of talk about what the Fed's going to do. They're going to be meeting this week. Maybe we hear some news on some pullback in the monetary policy, which would obviously tighten up the dollar. If they continue to extend it out due to the Delta variant cases being out there, that's going to soften up the dollar again. So wheat's going to move around with that pretty quickly. I just like the global wheat story right now. It's also supportive of that market. And that's going to be one of those things that can keep a little bit of a floor under the corn market right now, with wheat actually being the leader.
Well, John, I know producers need a little advice, need some help. They can reach you and the team there at Total Farm Marketing with a phone call or checking out the website anytime, can't they?
Feel free to give me a call, 800-334-9779, or shoot me an email at johnh@totalfarmmarketing.com. And again, don't forget that website, totalfarmmarketing.com. A lot of great information for your producers out there.
John, appreciate the time as always. Thanks for joining us today. We will talk to you again next week. Have a great week.
Sounds great. Have a good week, everybody.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Monday, August 23rd edition of Market Talk. I'm Jesse Allen. Have a great afternoon.